So you're not in as much distress as others, but you're still in distress because interest rates went up, right? You could be 90% occupied and still in distress in this market. And so if you can bring in that ancillary income, all of a sudden, like, oh, that was not income I was counting on. Now I look better.
You're listening to Ice Cream with Investors, a podcast that is dedicated to teaching you how to better invest your money so that you can live a more intentional life. I'm your host, Matt Four, and it is my goal to teach and empower you to remove the roadblocks to your financial success.
All right, Joseph, welcome to the show.
Yeah, thanks for having me.
Absolutely. Well, we like to start with the difficult questions here. What's your favorite ice cream?
Chocolate peanut butter Haagen-Dazs.
Okay, that's very specific. There's very specific. Go ahead. That's where I was going.
Make it out to Utah. There's a Nielsen's frozen custard, and it's the best ice cream you'll ever have.
Okay, is that in like Salt Lake, or is that a chain all throughout your Utah there?
There's probably 4 or 5 of them. Few here in Utah, one in Vegas, just kind of Mountain West corridor, but not many.
Awesome. Well, I'll check it out next time I'm that way. But tell our listeners, what's the scoop? What do you do today?
So I'm the founder and CEO of a platform called Neighbor.com. We're a nationwide peer-to-peer storage and parking marketplace. So we let people with that extra space rent that out to store a vehicle or to store items. We work with everything from individuals, kind of Airbnb style, renting out a garage or a driveway, all the way to big commercial property owners that have properties in 20 states renting out property on our platform.
Awesome. Well, I took a look at your site earlier today and was kind of fumbling around through it. How did you stumble into this business?
My co-founder gets the credit for that. He really, I think most good startup ideas, he just had the need himself. Him and his wife needed a storage unit, and they called around and all the storage facilities were totally full. So they were going to have to drive to another city and pay a bunch of money. And he just thought, to heck with this, called a friend, asked him if he could store in his garage. Fast forward 4 months later, he gets back from his trip to South America. He goes to pick his items up, and he's just thinking, this was such a better experience. I felt so much more peace of mind knowing my items were in a nice, clean garage in a neighborhood I trusted. Plus, I saved a ton of money. Why doesn't everyone do this? There's got to be empty space in every neighborhood in the country. And so, we kicked it off. We thought, what if there was a directory or a marketplace where you could know what that space was and reach out, and the price was already established and you didn't have to talk to your neighbor about that. And it just took off.
What year did you found the business?
It's about 7 years ago, 2017.
Okay. Yeah, I think you all tapped into a trend that I think is starting to happen in the world as a whole, that we buy these spaces and we have them, and 98% of the time they just sit dormant. So essentially the back seat of your car when you were driving to work for Uber, the extra garage that I was telling you about that literally has nothing in it in my house, you all find a way to kind of optimize that and extract efficiencies from the market, which is a super interesting idea there.
Yeah, I mean, sometimes for a homeowner, this can be $2,000, $3,000, $4,000, $5,000 a year. For some individuals that own a little extra property, maybe they have a large lot, they can earn $40,000, $50,000 a year doing RV storage. And then some of these nationwide commercial property owners earn 7 figures a year on our platform. So it's amazing how much value, to your point, how much value is just sitting there not being efficiently used.
So when we look at the nationwide operators, I wasn't familiar that you all kind of helped help folks in that space as well utilize this space. Who are you targeting there? How are they leveraging the platform?
Yeah, so I mean, we're open to any type of space, but I'll give you a few examples. We do a lot in the multifamily space, so a lot of the 10, 15, $20 billion REITs work with us. And a multifamily property is actually uniquely valuable because one, you've got parking that the city made you build, and a lot of times you don't use all that parking for the tenants, and so we take all that excess parking and rent it out for vehicle storage. And there's a number of different parking solutions, but a lot of them involve like a daily or hourly, and that can just be a disruption to your community. Whereas with vehicle storage, you bring that tenant in, they're not coming and accessing it a lot, and you're earning a lot of ancillary income. There's no capex, it's straight NOI. And then the other thing we do with multifamily is most communities build storage cages or storage lockers or kind of garage units as a tenant amenity that the tenants can rent. But those tend to be 25, 30, 35% occupied. And so we take the rest of them, we rent them out to the community for storage and get you up to 90% occupancy. And so on a multifamily community, if you've got a community that's several hundred units, you can earn 20, 30, 40K in NOI, in ancillary income. On a 6 cap, you're looking at $500,000 to $1 million in value. So some of these portfolios that have 300 properties, they're able to generate an additional $50 to $100 million in property value through our platform.
Yeah, it's interesting that you say that because we own probably a 230 unit multifamily right near a very popular lake near a top 10 metropolitan area. And we were out there one day and I asked him, I'm like, hey, what are we doing with all this land in the back over here? I mean, we own the land. It's not asphalted or anything like that. I never even thought about with your solution, like how many of those boat owners want to winterize their boats or just be able to park them for the summer if they're not being used, or even RVs.
Right. Yeah, and that's part of what we provide as a platform. We try to be full service. So we're not just bringing you leads. We're also your CRM for these. We help you set the price. We do everything. Customer support, they call us, not you. Because the last thing we would want is for your property manager or your community manager to spend more time on this. We even do the eviction. So if they need to get out, we take care of
Oh,
that.
wow.
The only thing you ever really have to do is give them a key. And like some communities are comfortable with that boat and RV storage, and that's great. Other communities aren't. So you can set restrictions on our platform and we'll pre-vet the renter for you and make sure what they're storing is what you want. So we really try to be full service there.
So obviously the first question you probably get a lot is insurance liability. How do you handle that both from the renter and the rentee's perspective?
Yeah, we're similar to a lot of the marketplace platforms in how we handle this. We have a $1 million host guarantee that protects our host liability on the platform, those that are renting out space. That's backed by a Lloyd's of London provider. And then we also sell property protection plans to the renters. I think we're the only storage operator in the country that operates in all 50 states. We have active users in almost every city in the country. But two, we're the only provider I know of that offers up to $50,000 in protection for the items that you're going to be storing. So consumers those renters can buy those plans from us. They provide it. They can also decline those plans, in which case they're holding themselves liable for their items. So we handle that piece as well.
I would assume since this is just storage and not housing, that there's probably very few regulatory issues that you run into, but maybe could you talk to us a little bit about how does the regulatory environment view this space?
Yeah, we're super fortunate that way. I don't envy the regulatory environment that Uber or Airbnb sit in. We like to say Airbnb's in the business of storing people. Anytime people are involved, there's a lot of regulation. With storage, there's almost no regulation. The only thing you really have to deal with is states regulate evictions and the process to remove items from storage. We've built a national database and we're compliant in every state in the country. And we've got that eviction process. We do everything from if there's a specific state or city that requires us sending out certified mail or posting in a newspaper or whatever it is, that's all automated. It happens automatically. We can have 30 days notice you can give your renter 30 days notice to vacate the space. If they don't, we can have them out in 60 days.
So just to make sure I understand, so your system will actually look to say, hey, Matt hasn't paid rent this month or the past 2 months, depending on the state and the city that it's in, the regulatory requirements there, and it'll actually proactively send them an eviction notice to start that process.
Everything. Yep. Yeah, it's all
I gotta say
automated.
that's huge. I tried to evict an tenant one time, and my lawyer, we were having some communication issues, and it took another like 17 days for them to send out the eviction notice, which, I mean, depending on what state you're in, could be another 60 days on top of that to get them out. So that's actually huge that
Right.
you've automated that.
Yeah, I mean, that's the beauty of a marketplace is we don't have the cost to build these, and so just the storage we've got on the platform today would cost a traditional facility $7-8 billion to build, maybe more. And so we're able to spread that across. So it makes a lot of sense for us to be super aware of every state and all that stuff. Whereas a smaller storage operator, it's just never going to make sense for them to understand this at a deeper level. We can understand it because we're spreading it across so many locations.
I'm sure this question is going to be an answer of it depends. But if I am a homeowner like I am today, and I have a garage that's empty, depending on the market that I'm in, all those sorts of caveats. But what do you typically see in your vacancies at, or your occupancy rates for people that host on your platform?
Yeah. So yeah, you're absolutely right that it depends on market price, your space type. That is one thing we excel at is we probably have the best storage pricing data in the country because we see so much price variability on our platform. So a storage company, they may only be able to test plus or minus 10% because they want to protect their margins. But we get individuals on our platform where we'll give them a recommended price, but they ignore us and they price 100% above that price. And we've got other individuals that price 50% below our price. And we have these algorithms that are able to watch that and see all the amenities you have. Is it fenced? Does it have security cameras? Is it climate controlled? And we're able to crunch all that data and know on a very specific kind of market by market, not just market, but like neighborhood by neighborhood level, what the clearing price is for different things. And you have lower quality space. Maybe it's an unpaved lot that has no fence. We still rent those out on our platform, and we know what the right price is for that to still get reserved. And so we tell people when they're signing up, if you follow our recommended price, you're 90% more likely to be reserved on the platform and be occupied. To answer your question, you can ignore us if you'd like to, but we've got that data available, which is a big plus for a lot of partners that want to use us. They're interested just in the pricing help to boost their occupancy rates.
From a host perspective, can you help us understand, like, I'm sure you have a breakdown of revenue percent that the business keeps and gives to the host. Can you talk to us a little bit about like what the host experience is like from a revenue generation standpoint?
Yeah. So it's a very similar model to Airbnb. We have a sliding scale take rate. So our take rate depends on your price. And the lower the price, the higher our take rate, because we obviously need to make our margin. The higher the price goes, the lower our take rate. So, if you're charging, we have so much space variability. We have people renting out closets on our platform and charging $20 a month to put stuff in their closet, and we're going to have a very high take rate there. And we have individuals renting out luxury car storage for $5,000 a month, and we're going to take a very low take rate there because we can get away with taking a very small percentage of that transaction. So that's how it works. We also obviously have other ways of generating income for ourselves, such as these property protection plans that we sell to the renter. We basically, the host, you as the property owner, you'll set a price or you'll use our price and you'll get almost all of that, whatever your price, and we mark that up. The only thing we take out of your portion is that processing fee.
Gotcha. So I'm setting the price, but the end user is going to see a different price, and that difference is essentially the take rate for the business. Gotcha. Gotcha.
Yeah,
When I was looking
that's
on
exactly right.
this site,
Just like Airbnb.
gotcha. When I was looking on the site too, I saw like only monthly rentals. I'm assuming you all offer flexibility on monthly, weekly, daily as well.
Everything's month to month on the platform. Everything we do is monthly, and we do that to provide flexibility to the renter and also flexibility to the property owner. That's one thing some of these REIT partners love is they'll ask us, well, what's your monthly fee? And we'll tell them nothing. We're entirely performance based. We don't make any money unless you make money. And also try us out for a few months. If you don't like it, you can turn it all off. It's all month to month. If you ever need to reclaim the space for your tenants, you can always have it back. Everything's month to month. And we know, just like any storage operator knows, that it turns out people stay a long time. you know,
Yeah.
people, and once homeowners are addicted to that income, you don't want to turn that income off either. It turns out that a lot of these property owners, once they start getting that ancillary income, it's so passive. You want to earn money on Uber, you got to go drive. Uh, you want to earn money even on Airbnb, you have to, one, afford to buy that property, and two, it's every 2 days you're getting a new guest and you got to clean up. And so people hire management companies to do that. Neighbor is the only marketplace platform I know of where you can have some space, you can list it, and then you do zero work each month, absolutely nothing, and you're getting a direct deposit into your bank account every month. It's the most passive income that I'm aware of.
Yeah, I am definitely sold on that. I want to not disclose anything that you all can't disclose, but I would like to talk around like funding for the business and user growth that you all have seen. So let's start on the user side. Roughly how many users do you have using or hosting on your platform every month? And talk to us about the growth before the pandemic and since the pandemic, if there's any changes that you've seen in your business.
Sure. Yeah. And the pandemic's very interesting. So in terms of like user size, we think about things on a square footage basis. So kind of that figure I gave earlier, just the square footage we have on the platform, it's about $8 or $9 billion worth of self storage. What would cost a self storage facility to construct? And that's about the size. Now, of course, we're not making what the self storage company would make off of that because we get a portion of the transaction, and our hosts are making the vast majority of those funds going to that. But it's everywhere. It's every city in every state. And this actually, the pandemic was a big inflection point in our business. When we first started this business, we only worked with these residential hosts, people renting out space in their home or around their home. And it was around the start of the pandemic that we had some of these commercial property owners who were kind of wondering what the next few years was going to look like come to us and say, hey, we noticed you have this successful platform. Could we rent out some extra space that we have on your platform? And at first, we were like, okay, well, maybe we'll pilot it. We piloted it. It was wildly successful. And so then we leaned into that motion. Now, the last several years, residential is still the largest component of our business, but commercial is hands down the fastest growing portion of our business right now. You look at what's happened to the office market over the last 3 or 4 years since the pandemic hit, just a completely different world. And especially with interest rates then going up, it compounded the trend of remote work, which was already driving down the occupancy rate. Now all of a sudden interest rates, especially if you've got a term loan and your monthly payment is going to shoot up. A building that was a 15% IRR before is underwater overnight. And we're the difference maker in some of these properties where they're like, I just need to survive until interest rates come back down, and if I can hold on to this property, I'm going to be good. The people that are going to lose their money are those that can't hold on to the property and they have to fire sale right now or let the bank take over. But those individuals that can find some way to scrape by and get to where those interest rates come back, those are the individuals that are going to look like geniuses in 4 or 5 years. And a lot of them are using Neighbor to just like, anything extra I can get to help pay that term loan, that helps.
Yeah, I mean, obviously, this probably wouldn't be the most efficient use of the space, but I'm thinking about office and how many
Right.
abandoned Class C office spaces there are in second tier markets. Like, do you have any of your clients today or hosts today that are just renting out office space that they're having trouble finding tenants for?
Yeah, we absolutely do. And interesting, we have a lot of like Class A office space in downtown metro markets. A lot of times that's not the interior space because you're right. Office is always a better use for that space than self storage on a earnings per square foot basis. But even buildings that are 90% occupied with office right now, their their actual daily occupancy is quite low because it's hybrid or whatever. So if they've got an attached parking garage, that parking garage is empty. And so we'll work with them where, we keep the first two floors just for tenants, because you don't want to disrupt that tenant experience. But we'll take that third and fourth floor of a downtown metro Class A office building, and we will pack that with cars that the tenants will never see. They will literally never see them up on those top two floors. And now you're generating income on that asset. And again, you may be 90% occupied, so you're not in as much distress as others, but you're still in distress because interest rates went up, right? You could be 90% occupied and still in distress in this market. And so if you can bring in that ancillary income, all of a sudden, like, oh, that was not income I was counting on. Now I look better.
I want to switch the conversation and talk about kind of your growth as an entrepreneur and the startup landscape
Sure.
and things like that, if I can. And this is kind of the first question that'll bridge us there. But when you're looking at the business as a whole, do you look at, okay, parking versus storage? Like, how do you break down your revenue? Because most businesses kind of look at a top line. Okay, it's great. We got $1 million or whatever coming in this year, but this part of our business is really driving growth. So I need to focus there. So how do you all look at it
Yeah.
from a top level down?
Yeah.
Hey, fellow investors, before we dive into our next segment of the show, I wanted to take a quick moment to talk to you about a fantastic opportunity for you to invest with me. As you know, here at Ice Cream with Investors, I'm passionate about real estate investing and helping you navigate the exciting world of wealth creation through real estate. And that's why, for the first time, I'm thrilled to tell you about an opportunity for you to invest alongside of me. Over the past 3 years, I've been investing in multifamily, mobile home parks, car washes. I've even become the bank and lent out money to fellow real estate investors on a short-term basis. And now you can come join me. If you would like to jump on a call and learn more about this opportunity, head to icecreamwithinvestors.com/invest and find a time for us to connect. And now back to the show.
Do look at those differently. You do get some renters that are looking to store a vehicle and items, and they're kind of crossover. We have this hybrid revenue, but the vast majority are one or the other. Um, in terms of business strategy, uh, we started with this concept of storage. That's actually where my co-founder had the need, but we found that vehicle storage, not self-storage, was a more attractive entry point because it's just so easy. It's so, if you have an RV pad and you're a homeowner that's just sitting there, you can rent that, get comfortable with the platform, and then when you're making money on that, all of a sudden you list your shed, you list, a bedroom or a garage space. It's the same thing with these large commercial owners. It's so easy for a multifamily community to take 5 parking spots that they have in the back, just dedicate them to the neighbor platform. We rent those out, they fill them, they start earning that income every 2 spots you fill, because in a multifamily, you're operating at what, 20-25% margins or something like that. And so you've got your gross income, but then you've got your NOI. And on an NOI basis, filling 2 to 3 parking spots is the same as adding a new tenant from an NOI standpoint. So all of a sudden they're like, oh, with 10 spots, I just added 3 or 4 new tenants to my place. They get addicted. Now they onboard those storage lockers that they had, and they start there. So it's really interesting to see how it starts in one area and then kind of shifts over time to the other.
Yeah, we to that point, we just acquired a mobile home park as well that has 100 storage sheds, and when we acquired it, 20 of them were occupied. So we're having some conversations about, okay, how do we go fill this space? And I mean, being introduced to you is very timely because I thought that maybe something like this would exist, but I had no idea it would exist.
Yeah, you probably don't want to, your mobile home park, you want to be spending your time operating a mobile home park. And so if you can bring someone in who can handle the auctions or all the weird storage stuff with those storage sheds, now all of a sudden you don't have to worry about that piece.
Absolutely. Absolutely. So going back to the business side and kind of your growth as an entrepreneur, neighbor.com, it's a SaaS-based platform. I would assume something like this would be perfect for San Francisco. You are based out of the Utah area. Talk to us a little bit about like why you chose Utah. I did a little bit of research. It looks like you were from there, so I understand that. But maybe some of the like benefits of being away from the mothership over in Silicon Valley and some of the cons maybe that you've experienced in your growth.
Yeah. So I'm actually from Vegas originally, grew up there, and then went to school in Utah and was planning on leaving. I was not planning on doing a startup, was planning to go on the professional services track. In college, I'd worked for a small boutique investment bank and then a private equity firm. And then I landed in consulting, worked for Bain and Company, accepted a full-time job, came back to do my senior year, and we started Neighbor my senior year. And so a couple months before I graduated, ended up calling Bain to let them know that I wasn't going to show up for my start date. And then that's what kept us in Utah. This is where we started building. Super grateful, honestly, that we ended up landing here. I didn't anticipate all the advantages that we'd have. One, the talent in Utah is just phenomenal. It's the fastest growing state by employment in the country. A lot of technology talent. A lot of Silicon Valley companies actually base their sales teams out of Utah, and so it's the state with probably the best sales talent in the country. One thing that you talked about cons, one thing that we lack in Utah is really, really strong consumer marketing talent. That's something you just don't have a lot of consumer companies in Utah. They're all SaaS companies. They're all B2B sales companies, where names like Qualtrics, if you've heard of them, where they're selling to businesses, they're selling to institutions. And so that's something that where we really have to filter. We have to interview and interview and interview and interview and interview to find that perfect person to fill a role if we really want to fill it with the best of the best. So there are some disadvantages in terms of funding. I thought that would be a major disadvantage, and it hasn't been. We raised our seed round, $2.5 million seed round from a group in Utah called Pelion Ventures, largest venture firm in Utah. They were phenomenal. When we went to raise our Series A round, we wanted to get someone with that consumer marketplace expertise, and that didn't exist in Utah. We ended up having Andreessen Horowitz lead that round. They had a partner that we really went after who, he ran eBay early on. Then he was president of PayPal when they bought PayPal. Then he was CEO of OpenTable, which is a big marketplace. Since joining Andreessen, his first year, he invested in a little tiny company called Airbnb. He's on the board of Airbnb, Instacart, who else? Pinterest, a bunch of other marketplaces. So we were able to get him to join our board, even though we're based out of Utah. Our B round was led by a group called Fifth Wall that only does prop tech investing. We wanted to bring in a really strong prop tech investor, and that's what Fifth Wall did. So it turns out if you have a decent business, you're able to attract the best capital kind of no matter what geography. The geography really just plays into talent. I think that's the main thing that geography does, is like what sort of talent is available to you.
When you're projecting in the future, there's all this talk about global talent and offshoring, onshoring, and remote work, hybrid work, on-site, all this sort of stuff. Do you see that continuing to be a challenge as the world evolves? Or talk to us about how you're kind of viewing the filling that gap over the next couple of years.
I actually love that we have this bifurcation going on. It's a massive filter, is what it is. We're an entirely in-office company. We have been. We kind of never, we were optional work from home for a small period there during kind of the high months of COVID, but we very quickly came back in office. I think we've been full-time back in office since like May 2021. And that's because we just really value those relationships. I think there's this big debate around productivity that's happening. Are you more productive in an office? Are you more productive working remotely? And I think that's kind of a false debate. It turns out that like A players, they work hard whether they're in an office or they're remote. B players, they're not productive whether they're in an office or whether they're working remotely. So you solve that by hiring A players. But one thing that you cannot replace, it's less about productivity and more about relationships. You cannot replace the relationships in person. You just, if you argue with someone on Facebook, you're going to say much more mean things than you say if you sat down with that person face to face. And it turns out that's really valuable. We really value that. And so when we're hiring, when we're asking candidates, what do you want to do? Those candidates that are like, I love being in an office, that's where I thrive, that's an easy filter for us. And those people that love remote work, they're able to go find what works for them. And so I actually think it's created an easier hiring process since this change has happened.
Yeah, it's always good to have that little filter to make sure the things that come across your radar and you're spending time on is worth your time. I was talking to a friend this morning and we were talking about business acquisitions, and he's like, yeah, I'm just getting tired of kind of sourcing through hundreds of deals. And I'm like, why don't you flip the script? Why don't you put a filter up so that deals that hit your desk, are going to be within your buy box that you could move on?
Yeah.
You started the business in 2017. If I'm recollecting correctly, that was your senior year of college. You've grown tremendously since then as a young CEO. I wonder if you could just touch on a little bit of the challenges that you've had growing the business and kind of what you've learned on your leadership journey.
Yes. Basically everything is what I've learned, but a few lessons I keep learning over and over and over again. I can't seem to get right. And this is going to sound so cliche because it's like the first piece of advice you get when you start a startup. But some of my biggest problems have come from not listening more closely to the customer, or at least not getting to know the customer on a deeper basis. You think you're doing it and you're not doing it enough. And every couple of years it comes back and hits us. Oh, if we had just gotten closer to this customer, seen the signs here, we could have made changes that would have drastically improved our business. We're making those changes now, but think of all the time, money, etc., lost during that period. So it turns out that you have to sell a product that people want. It doesn't mean you have to build everything that a consumer says they want. Sometimes there's a level of interpretation there where you build what the customer needs, not necessarily what they want. But you have to really, really, really understand your customer to build what they need.
Yeah. What about on the leadership front and leading teams? How big is your team today? And talk to us about kind of leading people.
Yeah. So one thing is that almost nothing matters unless you have the people right to begin with, right? Like if the people aren't right, nothing else is going to work. You have to get the people right because ultimately the people are the ones that are going to be doing everything, right? Every KPI, every objective that you hope to have, you can set the perfect objectives, have the perfect data tracking, have the perfect everything, but ultimately who's going to move the needle on that is the people. And that's the biggest leadership lesson I learn over and over again is just high talent density. Hold the bar higher and higher and higher. And you think it's going to cause problems. You think you're not going to be able to hire enough people or the right person or whatever. And it is better to go without than to move forward and lower that standard in any way, shape, or form. We've seen that time and time again where we've gotten less efficient in an area. It's because we didn't have the right people. Sometimes it's because we had too many people in that area. So I strive to hire as a leader. I want to hire people that work for me that are way better than me at anything because and I hope they're hiring people that are way better than them. And if you do that all the way down, then the people that are having the strongest impact, they're extremely strong craftsmen, craftswomen at their job. And that's what drives a company.
Absolutely. Absolutely. Well, Joseph, I appreciate the time. I want to take us to our last round. We call this the 4 toppings. Our first one is, what is your favorite book, or what is a book you've read recently that's given you a paradigm shift?
Yeah, the book I love, I actually don't love business books that much, but I love biographies. And I read a biography of Abraham Lincoln called With Malice Toward None. And I actually had my leadership team at Neighbor read that book because there were so many leadership lessons in how he led the country during that period. So highly recommend.
Do you listen to the podcast Founders at all? Are you aware of that podcast at all?
Aware of it, but no, not an active listener.
Yeah, fantastic podcast. If I could shout out another show, because that's what he does. He reads biographies and then kind of breaks it down over an hour podcast, and it's fantastic. So I'm going to have to check out that book.
Love that.
Our second one is, what's the best piece of advice you've ever received?
So hands down, the best piece of advice goes back to my top leadership learning. And this wasn't given to me personally, but I read it. There's a Steve Jobs quote where he said, A players hire A players, B players hire C players, and C players sink the ship. And it turns out that when you really think about it, everyone will always ask, how do you define an A player? But you can look around your org and you know who the A players are. You can pick out those individuals that drive all the value, and everyone should be at that level, and you should do everything you can to get everyone to that level.
I love it. I love it. Our third one is, what are you most proud of in your life?
Definitely family. Love having lots of kids. We've got 7 kids, and love everything about that.
Yeah, we were talking about that before. You have the stamina of a saint over there, because we were talking, I have 2, and got a little bit more gray on me, I think, than you. But yeah, that's awesome.
Yeah.
Our fourth and final one is, if you could sit down and eat a bowl of ice cream with anyone, dead or alive, who would it be and why?
Yeah, I'm nothing if not repetitive. It would definitely be Abraham Lincoln.
Yeah, that's I'm glad you mentioned that. That's who I would choose, because of exactly what you were talking about.
Really?
With his biography, I'm sure, is the leadership you have to bring together a divided country, and bring not only your friends on your staff, but also some of your enemies and divergent views, to say, hey, if we're going to be one country, we all have to sit at the same table, and start from there. So yeah, that's one of the people that I would name during that. So I think we align there.
Yeah, I completely agree. You don't necessarily want to talk to the person that was in a very, very successful environment. You want to talk to the person that was in a very unsuccessful environment, and somehow was able to create some sort of success.
That's right. That's right. Well, Joseph, thank you for coming on. If our listeners wanted to reach out to you, learn more about the platform or anything else you've got going on, where is the best place we could point them?
Yeah, we try to make it super easy. Neighbor.com. If you've got property, you can sign that up. It takes 10 to 15 minutes. If you do own a larger portfolio of property, maybe you own a bunch of commercial properties, or you're a regional or large REIT, you just email me and I'll get you in touch with our commercial partnerships team. I'm Joseph at neighbor.com.
Awesome. We will leave all those in the show notes. And then, Joseph, thanks for coming on.
Great. Thanks for having me.
Thank you for listening to Ice Cream with Investors. If you like what we serve you here, it would mean the world to me if you would like, subscribe, and leave a review on your favorite podcast app.